Hello, everyone. Good NFP, and we shall see. How's everyone doing today? We're doing okay. Hi, Glenn, Yasser, Warren, Vin, V. Everyone doing okay? A couple of things I had my eye on into the NFP. Hi, Kevin, Glenn. Last Friday, someone asked me about Aussie Kiwi when it was trading 580. I said I think I'd wait. We're approaching a daily trend line. Hardianto, if you're here, approaching his target. Dan Norberg as well. So here's your daily. Here's your 1 hour. Wouldn't mind seeing one more low into the NFP. We're starting to diverge on the 4 hour. But I'm thinking that we're due for at least a bounce back to 5.5 or so. So looking for potential toe in the water position there. Canada looks like it may have completed at 5.5, but I'm not going to do anything in front of the number. And Euro, we'll see. So have my eye on USD CAD and Aussie Kiwi. Give me a Y if you get my analysis. Hi, Alexandros. How are you, buddy? 4 minutes away from the number. Anyone, what is stalking, Alex, going into the NFP? Anything? So, expecting a dollar bounce? Okay. Think that could happen too. Euro pound. Maybe we get one more push up here for a 3. There's 1, 2. We called this decline yesterday. Either a failing rally or one more push up towards 87.60. Swiss diverging down here, maybe one more low, but really have my eyeball on this. I'd say that most of the Aussie Kiwi bulls have been washed out over the last several weeks. One minute and counting. Two minutes. Yes, it's been that way for a week or so. Shabazz, how are you? Nice to see your handle.
According to the DSI, by the way, good morning, Dale.
Hi, Steve.
According to the DSI, because I see our friend here that says that Euro sentiment is extreme and dollar sentiment is extreme. Yes, dollar sentiment is extremely bearish, but Euro sentiment is bullish, but not extreme. It has not reached extreme levels. I'm just noting. What has reached extreme levels again? Stock index sentiment. We have readings above 85 for both S&P and Nasdaq, and volatility is down to 10. The volatility sentiment, so it's extremely bearish VIX, so extremely bullish risk. So a lot can go wrong. Nasdaq has not had a down day since that Wednesday 2 weeks ago. That's like 12 days ago. And as you understand, you know, given any occasion, we might get some squeeze out of people that have loaded here on the highs.
All right, well, here's my S&P. You might get an inflection point here in the S&P.
Nasdaq
Although
is...
I've seen some counts that, you know, keep it bullish towards year end, but
Ooh,
I think there's a
huge
correction.
miss. Huge miss. 138.
But unemployment ticked down to 4.3.
Yeah, which means which makes this mixed. Obviously, for unemployment to tick down, obviously we had a decrease in participation rates. Yes,
0.2 decrease. So that goes hand in
okay,
hand.
so
with
that's why we got a decrease in the unemployment rate while having bad NFPs, and average hourly earnings are exactly as expected.
Yeah.
So that's
Trade
neutral,
down.
having to do with inflation pressures.
I think you could sell the euro with stops over the high of the day. The high of the move yesterday over 1260. It might be worth a shot if you give up the ghost here.
You think we're going to fade?
Yeah, I think it's a possibility that it fades on this. Let's see where, you know, just some ideas that I have. Let's see if they could blow to new highs or not.
Yeah, we need to see if, you know, if the market is going to give more emphasis in the nominal number of unemployment or in the miss in this month's NFPs. We'll see. We'll see. I'm guessing that the 4.3, you know, is significant because obviously if we don't see some great increase or if we don't see a reversal of the trend in participation rate, which is not very likely because one of the reasons participation rate goes down are demographics, which, you know, are not easily reversible. We might...
I would also start nibbling and put a toe in the water, risking 100 pips on Aussie Kiwi down here. We've made a new low. I have some glaring divergence. It's at some daily targets between here and 104. So this is what I really was eyeballing for today, Aussie Kiwi down here. I know you're not going to find a lot of technical reasons to do it unless you look at the daily. I don't know where FA is on Aussie Kiwi, but we're approaching this major daily trend line, and I'm starting to get hourly divergence here. Also, some very good traders in our community well over a week or so ago had counts taking us down to 104, so here we are. Okay, I'm through.
Okay, let's see what else we get.
Diverging USD, Alexandros has a look here. Let's see what he's got.
The year-on-year average early earnings of May are also just a little bit below estimate. They were exactly what they were previously. I mean, the print is more or less neutral.
The unemployment, hi, it's Nick. The unemployment rate has fallen though. It's in itself, hasn't it? So
yes,
I mean,
Nick,
it's not all bad.
Due to this month's fall in unemployment was 100% due to another decrease in participation rate. I'm not saying that that's bad. Actually, it is, but I'm not saying that you know, the Fed is going to be pushed back because participation rate is in a downtrend since years and years ago. So you know, this is something we've gotten used to. Although Fed governors in the past have made a mention to that they believe they've made a mention saying, if you remember. Like a couple of years or 3 years ago, they were saying that they believe that full employment should be achieved at around 5% unemployment. And then when we started reaching 5% unemployment, they started referring directly and sometimes indirectly to the participation rate, saying that you know, perhaps the unemployment rate does not show the whole picture, and you know, referring to the participation rate. But we haven't seen any reversal to this trend. So as long as you know, participation rate keeps ticking lower, that means that unemployment rate will still keep falling. You know, as long as we get on average these numbers, and we've had a couple of very good years.
Here's a look by Alexander Fontes. He's a pro, trades for a living, showing some divergences in the euro, some cloud support underneath. Thank you, Alex.
We're currently testing the highs of the 23rd and the 22nd of the month. Let's see if we get another rejection from there.
Yeah, see if we get, oh yeah. So. Yeah, it's exploding.
One thing is for sure that, you know, if we discount participation rate, obviously you cannot hope for something much better than 4.3 unemployment rate. I mean, yeah, nominally we can get even lower from here, but what I'm trying to say is that we've already covered a long way to what would be considered some years ago full employment. Because, you know, what is the percentage of frictional unemployment? I mean, we're getting close to that. But we're not seeing wage pressures on the other hand. So in a sense, you know, Phillips curve does not seem to be working at the moment. I mean, the economic theory says that the lower the unemployment goes, the more you get wage pressures, simply because the workforce has more, you know, has a better ability to negotiate, since you know, less people are looking for a job, and that means that you know, more power is to the workforce than to the employers, in a sense. So that's the general logic. But we're not seeing that.
I still have a feeling the dollar is going to recover here, even though we made a new high in the euro. That may have just been a stop hunt. We'll see if it starts trading back under these levels here of
USD yen, by the way, is again below 111. But I'm with you, Dale. I mean, it is a likelihood, because, you know, the next thought in the market is going to be, okay, what does that do for rate hike probabilities? Obviously, it doesn't ruin them. I mean, I consider that we're going to hike in June. I don't know what the market is pricing in right now. Stelio, can you have a look what the market is pricing in at the moment?
June Fed funds is mostly unchanged after the number, so it's still the same number, like over 90%.
Over
last
90%.
Time I checked.
And
yeah, so it's done for June.
The question is, did the chances for another rate hike change? Because, to be honest, I expected that June will remain an almost certainty.
Yeah, I have to have a look.
You're getting a pretty bearish candle in the S&P up against the wedge line too.
I'll tell you in a couple of minutes, Steve. I have to look at the feeds.
Okay.
Okay. Anyway, those are my views. So
we had a 161.8 target in SPX at 2,443. We didn't reach that. Just saying. But we have reached the target I had for Nasdaq. I mean, we had an Elliott wave target of 5,840.
Yeah, I think today's the day, Steve, for some kind of pullback.
You know something? If we close positive today, that's going to be the 12th consecutive day for Nasdaq. After just a
We're not going.
Yeah.
We're not going to.
It's yeah. Friday, 2nd of the month, as I said, this is as good a day as any for a reversal. That doesn't mean it's going to happen. That's why we're here monitoring. USD yen, though, is pressuring lower. We're currently at 110.80. A break below 110.50 is going to be bearish for USD yen. It's actually going to reinstate the bear flag formation theory. So 110.50 is the level to watch for USD yen. We also I see here precious metals.
Why don't you take the screen?
Sure. Let me take it. Nick?
Hello.
Hey, Nick.
Hi, Nick. How are you today, my friend?
By the way, Nick, what are you monitoring? Okay. Oil tagged 61.8. There we go. We were expecting that since we were up here, if you remember. So oil is moving according to plan, but gold is pushing higher again. As you see, we're pushing again close to the 1,280 level, which is very critical. It's the
Blake is laser focused on that trend line.
Yeah. Same here, and I think half the market is watching this level. I mean, this is extremely, extremely critical. This is extremely critical. And silver seems to be recovering as well. Here we
I
are.
think Eurodollar has blown the resistance for me, and that we are going to 114.50 next.
Yeah, next target I have, Nick.
I
And
think,
then,
yeah, I think maybe 113.20 will have a wobble, but probably we'll go to 114.
I have actually 113.43, which is the 78.6 from this move.
Okay.
And if you see, it also almost coincides with the high we had in August 2016. So I think around 113.50, I'm also monitoring this ascending channel, Nick, if you see, which we've almost perfectly respected for the time being. This one.
Cool. The Euro likes a 78.6 retracement.
Yeah, so next target, as it seems, around 113.50. If we don't reverse...
You're taking that one though from the, if you have it there, then you're taking it from the April 2016 high.
Yes, you're correct.
And not the August 2015 high.
Yes, you're right.
The reason that mine is a 78.6, but I'm taking it from the August 2015 high, and I'm looking at the decline in the euros and ABC.
You know something, you're right.
Putting the fib over both.
You're right, but your level is a little bit higher, so I completely agree with you. Let's see what it does when it reaches this 78.6, and if it breaches above it, then it's a good idea to monitor that 78.6.
Cool.
In which level did you say it falls?
I've got it at 114.20.
Around here. Yeah, sure. Okay, so let's see. Obviously, Dale, if we don't get soon a reversal, it means that the initial reaction was not a fake one, but we still have some time. I mean, we might see some reversal.
You have, you know, I know there's people that have some type of time frame after an NFP for whether it's going to reverse or not. You know, a lot of people.
In fact, I was just going to qualify everything I said by, you know, none of it counts until we see how today closes. Like, how you close on an NFP Friday, especially like the first or the second of the month. You know,
you see, Nick says the same thing I said yesterday, and she wasn't even here. Nick, I said exactly the same thing, that I like to see. I'm very interested to see what's going to happen today, not only because it's NFPs, but because it's also the first couple of days of the month. And I really believe that the move we're going to see today might shape up what we're going to see for the rest of the month. That's exactly what I said yesterday.
Yeah, well, statistically, the first or the second of the month, especially if they fall within NFP, are 6 times more likely to be the high or the low for the month than any other day. So.
Yep. That's it.
Pretty good fade in S&P on this so far.
Yeah.
On the other hand,
by the way, guys.
Yes.
Sorry. Just checked Fed Fund futures. They've only ticked up 1 or 2 base points, so we're still pricing one more hike after June for the rest of the year, and then just under 2 for next year. So mostly unchanged on this number.
So we're pricing 2 more hikes, including the one that we are probably getting in a few days for 2017, and we're currently pricing another 2 hikes for 2018, correct?
Not exactly 2 for 2018, under 2, but between 1 and 2, basically. So
okay, good.
So that's correct. Okay. But the bottom line is that these numbers only moved Fed Fund futures a couple of base points, so it's not a lot. It's not a big move so far.
But by the way, if you see at the big picture of SPX, since we were talking about the SPX, I have this very interesting pitchfork here. If you see, Dale.
Ouch.
Do you see this?
Yeah, stop sticking me with it.
And we're currently actually testing one of the parallels, which is actually the median parallel, which is very important. So, you know, for me, you know, we are currently at a very important juncture.
Sell it. Short term only, because here's a new count from Peter Goldstein on the S&Ps, and it lines up with what Peter Goodburn said.
Which is
there
what?
You go, guys. On the S&Ps. There you go.
We can't see your screen yet. Oh, now we can actually.
Yeah, so basically up until the end of the year, you know, there might be a little pullback from where we are now, maybe to
Dale, can you zoom out so we see the dates a little bit? So, for example, that peak that's like 3 before the dip in 4, when does it fall, having to do with date, according to this analysis?
This year end. The end of 5 of 3 is year end. Here's the explanation. And then we have a big break, and then we go above 3,000. That's Peter Goldstein. But, you know, I think there's a trade from here on the short side. Can't get every squiggle right, but, and this is what Peter Goodburn showed too, about 2,700 into the end of the year. And then a 30% decline, and then I think his numbers were even higher, going into 2020, like 4,700 or something.
Okay, those guys are good in what they do, etc. There is absolutely no doubt in that. But I have to make a comment here that in my opinion, actually, it's a good comment, because when you hear something, it's good to put it in context. So if we make the assumption that they're right, they're looking into a year that will yield from November, the November low will yield around a 33% return. So they're looking at a 33% increase from the November low of elections within 13 months, a 13-month period. Sorry, but personally, I'm not saying that nothing is impossible. We're obviously in some kind of a bubble, soft or hard. We're going to find out what it is. But personally, you know, I'm going to take the under if I have to bet on it.
Okay. Well, so far, looking for a high and inflection point in the S&Ps is, you know, if you took it, you have a nice lead. You could book half, put stops over the high of the day now.
By the way,
we're still much higher on the week, right? So no weekly reversal here. Definitely. But if you look at the week, you know my work. Here we had a confirmed high in the weekly in March, so it needed to make another new high, and we've made a couple, and we're actually at 70. So we'll see how it finishes. But why can't we get a pullback to 22.45 and then blast into the end of the year? You know, I still think that's a possibility, especially now you can't find a bear anywhere. I mean, when Goldstein was on, he was looking for a correction. So obviously he changed his mind. I see nothing but bullish counts from wave guys. And, you know, 3,200, you know, big numbers.
Current S&P index sentiment is at 87. Current NASDAQ index sentiment is at 86. Current volatility.
Has it ever been up there before? You know, has it ever been up there before?
Yes, but usually when it approaches 90, we see some kind of a reversal. Every time the numbers approach 90, we see reversals. Volatility index sentiment at 10 at the moment. So, yeah.
Still have a positive week in Canada, even though we're coming off here. Canada doesn't look done. Canada looks like it wants to still make one more run. We're getting a nice wick on this.
The levels to watch are 136 in USD CAD and 134. So we're currently exactly in the middle of, you know, those two key levels. So as long as that's the case, obviously, you know, you can view the current correction of USD CAD as a bear flag, and it might actually be. But, you know, if you're looking for a short, you need to be, you need to give it some space. You definitely need to give it some space.
Okay, Aussie Kiwi approaching the daily trend line. You know, Blake was talking about it with all this, and, you know, he kind of called this move yesterday saying, as oversold as the dollar is, it can't, you know, all it's doing is holding, not bouncing. You know, we had that one bounce last week. This bounce was weaker. But I think now we're approaching some levels that Jim Welsh talked about, and I think Nick, between here and 95.5 or so in the Dixie. I can't get short the dollar here.
I don't know about Nick, Dale, but I can tell you one thing. As it seems, the bear flag scenario that we had posted a couple of days seems to be
that's right
in works at the moment, because yesterday we got a bounce and a rejection from the broken flag, and today we seem to be resuming. Of course, we need to wait a little bit more to see what kind of a close we have, but my next target is definitely, if we confirm, a retest of the elections low, which is at 95.89, and from there we might see a good reaction. Nick, what are the levels you're looking for in the DXY?
You have the screen back. You have the screen back, Steve. So
here it is, Dale.
Someone said they bought the euro right before the NFP. You know what I said to them? Good guess.
It's true, isn't it? I think we go a little bit, for me, we need to go a little bit lower. So I'm looking for like 96.30.
Oh, 96, okay. Quite close. 25. I'm looking at 95.89 because I think the elections low might act as a magnet. That's what I think.
Okay. That's what Greg was saying.
No, I'm totally with Greg on that. Totally with him. Yeah. And let's, by the way, out of curiosity, let's make also a projection of the bear flag. So let's say that the bear flag does work. What do we get from here?
Yeah.
Let's see. That actually points a little bit lower. So theoretically speaking, the bear flag, sorry, my mistake. Theoretically speaking, the bear flag should take us perhaps even below 95. But that's what I'm seeing, like 95.89, quite likely. If we don't reverse soon, quite likely. I mean, the bear flag scenario is quite clear here.
Nice look, Steve.
And here's the USD, and by the way, let's have a look at it. And then let's have a look at bonds. Here it is. We had a retest of this one. You remember we talked yesterday about it, Dale, the 111.60, 112 zone. So we got a retest of it today, and we left this upper wick, and we're currently about to register an outside black candle, an outside bearish candle. That's obviously going to be quite bearish if that's how the day closes, especially if we close about below 110.50, because then we have another.
Yeah, so do an extension on that from the 114.5 to the recent low.
I can tell you,
take it down.
Yeah, I can tell you without even counting roughly that
106.
Yeah, that it should take us. I don't know if it's going to be 106. I think it's a little bit higher actually, but but we will at least retest this low at 108.10, at least, and probably lower if this bear flag plays out. And it's not obviously it's not a coincidence that both the USD yen and the DXY, in a sense, have built in the same sort of pattern here. So let's have a look at the bond, what they're doing. And as you see,
nice call, Steve. Yeah, bonds want 130, man.
Yep, bonds are about
128, 130.
Yep, and bonds are looking to retest to begin with the 38.2, which is at 127.50, let's call it roughly. As you see, you remember how long ago both Blake and I had spoken and said that, listen, everybody's bearish the bonds, but there is nothing bearish here. We were here at the bottom of the wedge, and we were saying, and I remember Grega also agreed, because he had come a couple of days later and he said, guys, listen, okay, I'm seeing an ABC here. And that's the case actually. We had an ABC, you see, and now we're moving higher again. And now that we're speaking about it, let me have a look.
I got an interesting piece on bonds from Jim Walsh. I was going to email you. I didn't have your email address. I sent it to Blake, but
sure.
Yeah, he's he's looking for maybe 2%. maybe a little under, but then that could be set the stage for a great short. Maybe we're finishing wave two ABC up to 128, 130, and then look out below in bonds.
No. It's very likely, but the sure thing is that the only time period that it wasn't easy for bonds to actually get destroyed was, as usually, when everybody was bearish. Everybody on their...
But remember, Steve, that you had that big shift from net short to net long. So in one of the quickest reversal...
You're absolutely right, but the DSI still shows us that sentiment is
bearish.
Roughly neutral. No. It used to be very bearish. And for notes, the sentiment is tilted slightly to the bearish side. It's 42 at the moment, and for T-bonds it's 58, which is, kind of bullish, but definitely nothing overstretched. Which means that from a DSI perspective, we still have the ability to move higher. I mean, I see nothing extreme there as well. And definitely the market has been caught off guard. I mean, everybody was expecting a rejection from here, then they got this, then we started moving lower. They said, okay, that was an overthrow over there. Then we had this breakout. Now we're registering. Just to put it in context, we're currently at new highs since November, and we currently have June. So we're currently registering a 6-month high. Almost 6-month high.
How about equality from the March low to the mid-April high, and then from the May low? Equality.
But that is very likely to have an ABC.
And where would that take it?
I'll tell you exactly. Let's make a fib expansion. Let's put on the magnet.
And this resistance point almost looks like a ascending triangle if we break out over 127 and 130.
This is your target, and actually we even have a confluence. We have a confluence. We have the equality target being almost at exactly the same place that the 50% retracement from the highs.
That's going to be the short of the year, especially if these guys are right about 2,700 in the S&P.
Oh, you're absolutely right. We cannot possibly see those kind of huge bullish moves in stocks.
Yeah.
And
then we'll finally get the lift off, and higher rates will help financials, which have not been participating in the rally because of rates. They need, the yield curve is inverting. They need it to go the other way. So.
Yeah, and you know what they say about inverted yield curves, right?
Well,
nothing good ever came out of an inverted yield curve.
Yeah.
Just to
well, I don't think it's inverted. I just think
it's not. It's not. It's flattening, to be honest.
Yeah.
It's flattening. But whenever you see a yield curve flattening, it's a worrying sign, because in essence, to speak from an economic perspective, what you want to see is that you want to see a healthy difference between future yields and current yields, because when you see the opposite, it means that the market is probably discounting that in the future you'll have worse conditions than you currently have, which means that it's looking forward in a glim, in a glim way, you know what I mean? And that's why you also see in recessions, before recessions, very often, these kind of movements.
Okay, we're getting a nice tail in the euro and the bond. You know what? When people say this to me, you know what I say? Ever hear someone say, Steve, let me be honest with you? You ever hear that expression?
Of course.
Okay, you know what I say when they go, Dale, let me be honest with you? I go, well, why me and why now? Like it's an exception. They're going to be honest with me. They have to tell me that they're being honest. Okay. Anyway, you know me in words. I get a little mashuggy about words. Let me be honest with you. And I go, well, why? Why now? Why do you have to be honest with me? Okay, Luca likes Aussie Kiwi at 104. Someone shorted Aussie Shabazz Shabazz says he's been watching us on YouTube and he's really been enjoying us. Well, welcome to us live in action, Shabazz. And nice short on Aussie.
Hi, Shabazz.
Okay, somebody can also be watching in Aussie Kiwi since they really want to have a look at it. We, for example, you know, we have a potential trend line that comes from here. So if we get rejected here, but you know how it is. I usually dislike trend lines that just come from 2 points because yeah, okay, you know, you can select any 2 points and draw a trend line from that, but you know, trend lines start having value after you see them being respected the third time. So you know, I'm drawing this here, but you know, I don't have too much faith in it. The only sure thing is that this move is overblown here. I mean, we made a move from 108.20 and we're now down at 104 within, what is it, 2, 4, 6, 8, 10 trading days. So that's 2 weeks, 400 pips in 2 weeks for a pair that usually does not produce big moves. RSI is currently at 24 and change. So yeah, okay, I totally understand why somebody would want to look in the upside. But as I've said before, I don't see any real technical level that makes me, you know, happy with it. So I'm just monitoring. This level I care more about if we get down there. This one.
340.
Yeah, it's 330. You know, it depends exactly how you draw it, but it's between 103.20, 103.50. If I see a nice reversal candle from there, because that will also coincide with those 2 lows that we found here, then I'm going to be interested. I mean, I'm going to have a confluence of multiple levels, and then I'm going to be interested. Because there
are a couple of face members that I don't like to fade, Hardiano and Dan.
Oh, I'm totally with you. I'm not saying that.
Yeah, I mean, I'm just saying they were talking about this number hundreds of pips ago, and I'm sure that they're probing it. So, you know, I have some 1 hour divergence on it anyway. Figure it's worth a shot.
I tell you why it's a level for me. I'm not quite sure it'll be the low, but it's definitely a level. It's the 88.6 retracement from the January 2017 low, and it's the 78.6 retracement from the September 2016 low, and they line up, you know, absolutely together there, and that kind of confluence I don't think you should, you can ignore. So if you say from that 2016 low, if that was an ABC, then this is the 78.6 retracement. So yeah, that is actually a big deal usually. The only problem for me is when I look at all the corrective swings in the decline from March high, none of them kind of project an ending there. So that's the only kind of thing that makes me, but yeah, I definitely wouldn't be selling it here. And
I'm thinking at least about, you know, I'm not calling for the resumption of a bull, but how about a rally back to 550 or so? I think that's feasible. And then reassess 550 to 580 where it really accelerated to the downside.
Yes.
That would be maybe definitely. What, 38% correction from the high over 110.
Nick, I'm actually drawing what you just said.
Okay, Aussie Kiwi on the daily chart, it's the 886 retracement from the January 31st low.
Okay, I see it. You're absolutely right.
And it's the 78.6 retracement from the September.
Yeah, I just drew it. You're right. They coincide perfectly.
So there is quite a bit of confluence.
You're right. And we also have this.
So for me, the first target on the bounce on the upside is going to be those previous highs. So 105.45. If we get above 105.45, I say we've bottomed. But that's where I'd be looking to go to.
Do you see my screen, Nick?
Okay. Yeah, so we're
you see,
we're on the same page.
Yeah, we're on the same page because I had drawn the exact same zone. Do you see this zone? The middle of this zone is exactly what you said. It's 104.54. So
don't fade Nicola Duke. That's what I say.
Oh, for sure. I mean, you know, I've known her enough to know not to do that. So
oh yeah, I know her better.
I'm with you. In case of a bounce, I think that this level 1.
You might know her longer. I know her better. Be right back.
Okay. So yeah, I agree with you, Nick. I think this level is the first target to watch in case of a reversal. In case of a reversal, but you know, I think this is a good level to watch. Then we have the 200 DMA at 106. We also have this long-term descending trend line as well that will coincide about there. For me, it's not a matter of if it's going to turn higher for a bounce. It's either going to do it here or a little bit lower, as we said. The question is, what kind of a bounce will it be? From a harmonics perspective, what kind of a bounce would you expect? A corrective one or an impulsive one?
For me, I think that from the March 2015 low, we're in a big triangle wedge, and they tend to break to the downside with the trend, and so I expect after a bounce that will continue lower, and that actually what we're going to see is 3 drives from the August 2015 high.
Okay. Okay, so you are medium to long-term bearish.
Yes.
Okay.
But definitely this is a level to bounce from. And you know, if we get above that 105.45 and we reverse the trend there, then I would be definitely reassessing it all. But yeah, I'm looking for sort of 1.01415, 1.017 on the downside.
Okay, cool.
Hey guys.
Hey, Blaker. Welcome. Welcome to the party.
Hey, hold on.
Yeah.
Welcome back, Dale. Blake is with us as well.
Yeah, I'm here. I'm kind of, yeah, I'm here. I'm just kind of fumbling around. Hey, how's it going?
Good, buddy.
Good.
You want to take the screen, mate?
Not really. What am I going to show you? You know, I
from
can.
the wedding.
Blake is in the house. Let's see him click his mouse. He left another webinar, doing double duty today. We missed you last week, Blake. What is your
dates on one day? That's so bad.
What's that?
2 dates on the same day, so bad.
Seriously.
Yeah.
So
you had a double date today.
Because this is my favorite thing to do in the world. So you can see the euro dollar, it hit a new high. Relative strength, it was divergent. So there's got to be some hesitation up here, and you know, people are probably getting short, putting stops above 113.10, which is the spike high from the election night. I mean, that's just, you know, that's like trading 101. So the question is, are we going to break above there, or are we going to make a move to that? And I don't know. I mean, the dollar yen's the same thing. You know, everybody's probably getting long down here and saying, okay, well, I got manageable risk. I can get long and I could put my stops below like 110.50. You know, so these are all really pivotal areas for the market. So it's hard to sit here and start to chase the dollar lower. But at the same time, if you're long, you're probably getting pretty nervous. I would think if you're long the dollar, you're tightening your stops up relatively close. The other thing that I'd be looking at,
looks like an internal head and shoulders top there, buddy. On the
well, look at the euro pound and think about like the cross rate effect you get in this euro pound. You know, how many people were trying to short it yesterday? I mean, I'm long, okay, and I'm expecting a longer term move higher, but how many people were shorting the euro pound yesterday that just didn't get any type of follow through? So now those stops got to be pretty close to the market too. So if those stops start going off, the euro above 113, those stops start going off, we could really see a dollar liquidation come in today. So And one of the other things that I was looking at is the S&P.
Oh yeah, yeah. What do you think, man?
Well, and gold too, but the S&P is right, you know, knocking its head up against here. Let me my trend line's kind of it you know, it kind of depends on how it is. It's something like this, you know.
Look at that divergent.
Yeah, I mean, it's massively divergent. So, you know, depending on how you draw your trend line, and you know, we're probably up at some key resistance here, and so you got the stock market that looks like it, you know, could probably, you know, show some reversals here. The Nikkei.
Wasn't that Nick?
Oh, I got to show you.
I'm sorry, I'm interrupting you, but I think Nick was calling for a target up around 2450 or so earlier in the week. Is that right, Nick?
Yeah, that's 161% extension, right, Nick?
Yeah, that's it.
Look at the Nikkei. I mean, the Nikkei. So we plow through stops above these highs, get everybody long. We hit 127% extension of this move right here, 127% extension. Get all the shorts out, you know, all the weak shorts that had to get out. And if we close back below like 20,000, which is only 100 and some points away, the Nikkei is going to buckle. And then on top of that, you got the dollar yen that's been grossly underperforming. I've had a bunch of people ask me, hey Blake, you know, any clues, any ideas? And I'm like, the dollar yen's underperforming. The dollar yen's underperforming, gold's outperforming. So, you know, how about if these yen pairs really start to buckle lower? You know, and then you start to see some risk off. You know, I think it's entirely possible at this point that the market really starts to roll here. So and the yen pairs are going to be the catalyst that drive them below that. Now it's not just the yen. If you take a look at the 10-year, the 10-year is above its 200-day moving average, and we've got you know, this is however you want to draw it. This is a bullish wedge, whether it's this one or that one. It's trying to break higher. Bonds break higher, yields drop, dollar gets killed. You got the bond market that's on the move here. You got gold, which is scary close to 1280, and I'll tell you, you know, if gold starts to break out, I wouldn't want to be A, long the dollar, B, long equities, you know, and I'll tell you, gold looks pretty damn bullish, and I would be a little nervous if I was short gold. I mean, how many stops are residing above 1280 right now? You know, it's got to be a lot of them.
At least one.
At least one. Yeah, and somebody's got to shorten a stop above there, I would think. So I mean, I think you got to keep an eye on and these yen pairs. I mean, look at the pound yen here. What a turn from channel resistance.
Yeah.
Massive
turn
there.
That's why I didn't buy it down there. I think Greg is talking on FA. Should I give it away? 138 ballpark for the guppy. Oh,
for the guppy? I don't think that's a unrealistic expectation to see it move. Yeah. You know, down here is somewhere in this neighborhood. You know, I don't think it is. Well, that doesn't seem. It doesn't seem really unrealistic to get down to the 618. That seems very realistic, especially with, you know, you don't know how today's going to shake out, but you know, it looks entirely possible. Futures look weak. The S&P futures look weak. The dollar looks vulnerable, and I think we've got to keep a real close eye on what happens with the dollar here. I think the dollar is very, very much in play at the moment, and it hasn't been in play for a while. But you know, these yen pair. I mean, look at the Aussie yen.
Pop your dollar yen up again, Blake.
Yes.
Pop your dollar yen up again. So your dollar yen, you see this the range that we've been in, since that 18th of May low is really like the golden ratio zone of the rally. So we've been bouncing between the 61.8 and the 38.2 of that rally from the April low. And I think, and just underneath us, underneath your thick red support line there, is also the 200-day moving average. So I think that a break lower below that that 17th, 18th of May low should set off a trend move. But it might also, you know, hold a support today. It's definitely quite important, and there's a lot there. So
yeah, you know, I 100% agree with you. Yeah, and so what Nick's pointing out here is you got this 200-day moving average right here. Okay, you got that 200-day moving average right there. You've got that horizontal support. You got the 618, which is this red line that you can see right there. And then she's saying, you know, then we're bouncing between that and the 38% retracement line, which is right there. So we're really kind of contained. But the risk is if we start breaking lower, I mean, it could get downright nasty. Yeah. And she's right. You can start off a trend.
There's a lot of energy building up.
Your bottom red return line.
What's that?
Your bottom red return line and uptrend where they intersect. Yeah.
Yeah, I mean that comes in at 105, but you know that was I don't know if I'm expecting that move just yet, but we have I mean this is if you think like you know, in terms of Nicola Duke, you got an AB CD. This would take us probably down towards 108. That seems
more probable.
Really quite possible. One of the other things that and I shorted some today is look at the U.S. dollar Swedish krona. I mean, look at how vulnerable we look right now. This is an uptrend line since March 2014. We're trading below it, and we traded to brief new trend lows here. So you know, when you're starting to look at like dollar, you know, what can happen to the dollar? I mean, if the euro dollar rips above 113 and the dollar yen breaks through 110.10, 110.20, which I don't know if it's going to happen today, but you know, these are all things that could really start like a chain reaction, if you will, or I always like to call it the domino effect. You know, as one domino falls, then they just start falling, you know, left and right, and you know, you start to get, you know, one breakout, then the next breaks out, then the next breaks out, and next thing you know, you got a full-on trend move. And so I think you got to watch. I think you got to watch the stock market today. I think the stock market looks vulnerable. You know, if we turn negative today in the futures and we start to give back some of these gains, especially if we get back below like 24.20, that's going to be a pretty bearish event for equities. Not sure it's going to happen today, but it's something that I'm definitely keeping an eye on at the moment.
It's happening today.
Yeah, and I say that every day.
That comes from the broken clock, Dale Pinkert.
My pick of the day is dollar CAD, I think.
Yeah. So what are you going to do with the dollar CAD? I mean,
okay. So the dollar CAD, if you pop your dollar CAD up.
Yep. So this is the way I see it, by the way. Just so you can see how I've seen it.
Okay. So if we
last couple of days. But go ahead.
So if we zoom in a bit, let's go in on a 4-hour or 2-hour or a 1 hour. So it's done a perfect reversal from the 38.2 fib, and that is also a perfect ABC. That first swing higher into the high on the 26th of May was A, so it's a perfect ABC and a perfect 38.2. And for me, the dollar Canadian is like your SEK, your krona. It's my canary. So this turning lower here is bearish dollar for me. So yeah, I agree with you.
Yeah, nicely.
100% agree with you. And so if you watch this dollar CAD and you're right, it's turning from this 38% retrace.
It's an ABC into a 38.2 retracement. So it's a perfect bearish setup, really.
So if it can turn here, this is what Nick, this is what you're talking about, right? I just want to make sure everybody else visually can see it. That's what we're seeing, possibly. Like, and especially if we break through this trend line, we break through like 134.30. I mean, now we're targeting 130.150. And one of the things that I guess it sticks out like a sore thumb to me, and I don't know about you, Nick, is people were aggressively short Canadian dollars. Aggressively.
Yeah, and I think people are still trying to trade it as a proxy for oil, and that's really not working. You know, nowadays with shale, you know, the US is as big a producer of oil as the Canadians are, so that kind of doesn't really quite work.
It's a great point. It's a great point. So, and in this case, I mean, if we get an ABC, I mean, we're gonna kick off a pretty big, possibly down move in the dollar Canadian, if this all takes place. That's why, to me, it's 134, which is right here, 134.30. These are all really all very important areas that I'm watching for today in the market. Okay, anything else that you guys were looking at? The Aussie New Zealand. That Aussie New Zealand came right down to trend line support, didn't it?
Yeah.
We have confluence of supports here. Nick was showing that we are at the 88.6 from the previous low and at the 78.6 from the low before that. So we actually have a confluence of fibs plus the trend line you're looking for. So we have a triple confluence at current levels, Blake.
I see. Okay, so there's your 786. There's your 88%.
The other one is the 88. Yes, exactly.
Yeah, and then we have trend line support. So, you know, let's see if we can turn higher from here. It's going to be. Trying to buy this thing. I've been buying it for the last 2 days. So my cost average is like 104.50. It's like catching a falling knife and trying to juggle with them. So, you know, it definitely has been a dangerous game, but we are grossly oversold here too. I mean, you know, relative strength wise. So we're going to be getting a bounce probably within the next 50 pips, I would assume, like whether it's here or whether it's, you know, maybe another 30, 40 pips lower.
Yeah, that's where Steve's line is. Yeah.
Yeah, you know, we're probably going to get a bounce from these levels, I'm assuming. The question is, you know, is it here? I think it's something you just got to start looking for. You got to really look for, in my opinion, like look for reversal candles on like 4-hour charts, like really big ones, and we haven't seen that yet. I mean, it's been pretty nonstop gross. I mean, as far as price action goes.
Dave and LaShawn are saying that they've added to net long positions in Canada. So there's even more.
Oh.
Yeah.
Well, it's going to be interesting to see what it's going to be interesting to see what the COT shows today. So
if they've added to net long Canadian, then they're short dollar CAD, right? Or vice versa?
No, they're long dollar CAD. So that means they added a Canadian. Yeah, they added the dollar Canadian longs.
Okay,
basically.
Cool. Thanks.
Yeah. But anyway, that's really kind of the stuff I'm paying attention to, and it's the question now is, are the dollar shorts going to really, or are the dollar longs going to really liquidate today? And I don't know if that's going to be the case, but that's what I'm watching, because, you know, gold is you know, really near some pretty key resistance at this point. And you know, gold's not backing off either. I mean, gold looks strong. I mean, I have to admit that if you look at gold and you're sitting here short, let's just imagine you're short gold right now. What are you thinking? You know, as we're inching our way up towards 1280, got to be getting nervous. Got to be getting nervous. So anyway, but hey, guys, I haven't been to the bathroom in the last couple hours, and sorry, I hate to give you too much information.
Oh, that's a record.
Yeah, Dale, I'm going to flip it over to you, or yeah, it is really. I'm going to flip it over to one of you guys, whoever wants it.
All right, but good Nick, discipline, good urinary discipline, Blake.
Nick,
thank you. Not like you guys needed to really hear that, but Dale, I pass it over to you, buddy.
All right, actually, I have an interview. So, Kevin, yeah, which Kevin Magic Kev? I have Kevin Arajo, I don't think it's Kevin Hercom, or is it Kevin K? Can you please tell me which one?
Dale is the interview for now, in 5 minutes from now?
Yeah.
Oh, okay,
yeah.
perfect.
Because I double booked yesterday, and I'm trying.
So you're like airline tickets, right?
Yeah, I double booked.
Yeah,
and
airline
Kevin,
companies, you double book, and yeah.
He didn't want to get off. He didn't want to get off the plane, but I had Stelios drag him off. Okay, I got it. I know who it is. So Kevin, are you ready? We could do it now. I'm going to make you the presenter. This is @MagicKev on Twitter. And I talked to him while I was at FX Street. I don't remember the interview, but he said he played it. And looking forward to Kevin showing us his magic. So Kevin, you are now the presenter, waiting to hear your voice. Hi, buddy.
How's it going, buddy? How are you?
Oh, great to hear your voice, and thank you so much for your understanding. Yesterday, CNBC anchors have bookers, so I do my own booking, and I double booked and had Cody yesterday, so I'm glad you can make it today. Why don't you refresh my memory, since I just turned 64. What did we talk about? Was it a year ago or so, Kevin? Over on FX Street?
Yeah, that was about 2 years ago. At that point, I was 2 years into trading, and I just recently came across my mentor, who took my level of understanding supply and demand to a totally different level of understanding.
Who would that be? Sam Seiden?
No, see, I was taught by Sam Seiden to begin with, and then I found a guy by the name of Alfonso Moreno.
I interviewed him.
Did you?
Yeah, recently.
Yeah.
Okay.
Yeah.
Yeah.
That guy is that guy, in my opinion, is a real genius when it comes to supply and demand trading.
Okay.
And so I've been studying hard his work for the last 2 years, and seen some real.
So this is what, your 4th year now, right?
Yeah, so I'm 4 years into it now.
Well, you should be graduating. That's like an undergraduate degree, 4 years of screen time. So
yeah,
are you making breakthroughs now?
I am making breakthroughs. I am. But it's like the more I learn, the more I realize what I don't know.
The more you don't know?
Yeah. And so it's a work in progress. I love studying charts. I love working. So, slowly, eventually, things start to unfold.
So I see you're accumulating Aussie Kiwi underneath.
Yes, that's right.
Is that correct?
Can you see this screen here where my
Yeah,
mouse is?
we're looking at the gold right now. The XAU weekly is the chart.
Oh, okay. Oh, yeah. Right now, I got a long position on Aussie New Zealand.
If you wanted to start with gold, that's okay too. But you're looking at supply demand here.
Mm-hmm. So what I've got on my charts here are areas of supply and demand that the institutions have been using to accumulate or distribute gold.
Okay.
So from what I see,
a big number, do you?
I'm sorry?
Is 1280 a big number? I know there's a big trend line there in gold.
Well, I think price is going to break up to the upside and break through the 1280, to be honest with you.
Yeah.
There's a nice, because if you take a look here, I'll open up the weekly chart and just show you something.
It looks like you're looking for about 1340.
Yeah, up in these areas, I think we're going to get a reaction. Because if you look at the monthly chart is the most clear chart. And so we're bouncing off a 3-month demand zone. All right. And so when price bounces off a 3-month demand zone, it's the sky's the limit. And if you take a look at a monthly, there's really nothing to stop price from heading even higher. So we got this area that I've marked off as supply, but this is not the greatest looking area of supply. It will be respected because it did remove an area of demand. So whenever an area of supply removes an area of demand, then that area tends to be respected. So I think we're going to head up a little bit higher on gold, and that's going to hit the 1308 area, and then we're going to see a move to the downside, which basically coincides with the move that I'm watching on the US dollar. So if I switch over to the US.
Okay, so you're thinking 1308 and then a big break in gold, or just consolidation?
Yeah, I think 1308, then a small move to the downside. Probably consolidate there for a while, and then eventually break up even higher.
Okay.
But
so I saw on your monthly chart
right
the potential for 1500 on your monthly chart.
Yeah, if this area, but the bottom line is if this area here breaks, if this 1375 breaks, then there's nothing to stop price from moving all the way up here to the 1500s.
I'm getting a question, are your supply zones, does it come off an MT4 indicator, or is it proprietary?
Nope. It's all my hundreds of hours of studying charts and analyzing supply and demand. Yeah.
Okay, so what did you learn from Alfonso that improved your looking left trading techniques?
Well, what I learned is that not every imbalance on a chart is a valid supply and demand zone. So the importance of supply and demand is when you're looking for areas of imbalances, we're always looking for areas that remove previous areas of either supply and demand, because institutions always have orders to fill supply or to fill in demand. So if the institutions feel that price is going to head higher, then what they have to do is they have to be able to bring in more demand than there is supply at the key level. So if they want to break through supply, then they need to fill in so much demand that it'll cause price to break through that supply. And so when they fill in so much demand that causes opposing supply to be removed, what tends to happen is price tends to pull back to those areas of demand so they can fill in the rest of their orders, and then price continues to shoot up to the upside. So what Alfonso taught me was not only how to find those key levels of supply and demand that are valid, but how to interpret price based on looking at multiple time frames as high as 6 months charts. So we look at 6 months charts, 3 months charts, monthly charts, weekly charts, daily charts, and 4-hour charts.
I remember that in the interview. His stuff was telescopic.
Yeah.
Supply demand stuff. Yeah, I remember saying
it's really important.
The monthly and the weekly were the most important to him.
Yeah, very, very important, because like on gold, if you look at a 3-month chart, for instance, we have an area here that we have considered to be demand. So why is this demand? Well, because price was heading up, heading up, heading up. It consolidated here. And when price consolidates, institutions can either say, okay, enough of this consolidation, let's either take price higher or lower. And so when there's an explosive move to the upside, like this green candle here and the following candles after it, what tends to happen is when they exhaust the demand and price retraces, it only retraces to areas where that demand was so strong. And it just happens to be this key level here. So as you can see, price came down to this key level, created a nice bullish engulfing candle. Price comes and retests that area, and now we're getting that move to the upside. So by looking at the 3-month chart, it looks like price is just going to be heading even higher from where we are right now.
Great look.
So can I show you something interesting on the US dollar?
Sure.
Yeah. So.
Oh, we're always open
really
to interesting. No, in fact, why don't you show us something very boring on the US?
Well, take a look.
Go ahead.
Take a look at this US dollar. So US dollar hit a 3-month supply zone right here. This little spot right over here. And so here's the zone, this line coming over. So price is trending upwards. It's that area right to that line and starts to drop. So what tends to happen, Dale, when you have a 3-month uptrend, which is what I clearly see on this chart, is a 3-month uptrend. Yeah. When we hit an area that we call a CP supply zone, we call it CP. CP stands for continuation pattern.
Okay.
So we have a drop and then consolidation, and then the institutions decided to continue the momentum to the downside at this location. So what tends to happen when you have this type of consolidation is when price hits it, for whatever reason, I don't know why it works, but I do know that it does work. When we get back to those areas, the supply comes back into the market. And so when price drops from a CP area of supply, what tends to happen more times than not is when we drop down one time frame, we find a demand zone, which is what we're about to hit right here on the monthly chart, and price will react to that demand zone, consolidate for a while, and then eventually move to the upside and eventually take out that 3-month CP supply zone.
Okay, so that's interesting. So your work is saying we're getting close to a low, and then you would anticipate 104 or whatever it was, 103.80 being taken out to the upside.
Yeah, I anticipate that within this 95 to 94 area, we're going to get some accumulation,
Dale,
and then I'll be watching the...
Can I ask a question to Kevin, please?
Sure, go ahead.
Okay,
Kev,
Kevin.
This is my partner in crime, Steve Volke.
Yeah, it's nice to meet you, mate.
Hey, nice meeting you too.
Can I ask you a question? Can you go back to the
Sure.
the DXY chart?
Yeah.
The one you were showing before with, what was it, 3 months?
The monthly.
It was a quarterly, I think, yes.
I think it was a monthly.
Yeah. Yeah.
No, it was 3 monthly, yeah, it's this one, yeah.
Yeah.
So for example, the zone you characterized there as a supply zone, because we had a consolidation on the way down, is back in 2001. Do I see that right?
Yeah, that's right.
Okay. I'm not doubting that this method works, and I do believe that price has memory for several reasons, and in many occasions it's exactly what you mentioned. It's the fact that there is a lot of vested interest in the market. But since in this occasion we're talking about something that goes back to 2001, do you believe that there were institutions, for example, call them banks or call them whatever you want, that committed to a position back then that they're still holding 16 years later?
No, I don't. But you know what I believe? I believe the thousands of hours I've spent on Forex Trader, on Forex Tester, and all the forward testing that I've done has proven to me that regardless of how many years back a supply zone goes back, for some reason, those zones get respected.
Oh, no. I agree with you. I've seen that many times.
Okay, so
I've seen that many
market
times.
is like an elephant. It has a very long memory.
Yes.
I don't know how it works, Dale, to be honest with you. I'm not even
You're absolutely right. I do think that price charts, have a sense of memory, but I doubt that in these kind of occasions that we go so much back, it has to do with the initial positioning we had back then. That's my only...
No, I don't think it's because of initial positionings that they had in 2001. It's probably that the institutions are basing their decisions on what they've decided in the past. I think that's probably my best guess, but I couldn't tell you exactly because I don't know. But what I do know is that
they look left too. It doesn't mean that they have a position on.
Yeah, probably, or maybe it's their algorithms that are programmed to respond to previous areas. I don't know, but all I know is it works. I mean, like you look at this line here and you see that reaction. The supply came into the market at that exact same spot. I'm not quite sure why, but that's crazy. It just works. All I know is I bless the supply and demand gods for the fact that it does work, because if it didn't work, I wouldn't be able to trade these markets.
Well, it sounds like, let me ask you this, Kev. You brought up a great point.
Yeah.
You back tested, you forward tested. You probably put in many hours before you went real time or changed your method. Give us a ballpark of how much time you spent back testing this methodology before you put it into action.
I worked until I got carpal tunnel in my hand.
Okay, well that's long enough. All right, so anyway, that's a point to our community that if you're trying a new method, that back testing is crucial. A lot of time has to be spent before you put live money on the line, and that's why you have confidence in your in your work and your models is because of all the time you put into it. It wasn't just, well, you know, I saw a video on supply demand, Sam Seiden on FX Street. Like I said, you know, a lot of people say, I will teach you the secret to trading. And you just told people what the secret of trading is. It's hard work and persistence and a lot of hours. So, you know, congratulations on your persistence.
Oh, yeah. Thank you. I appreciate that. Yeah. So, yeah, it was a lot of hours. And it was,
and that's all you do is you're just trading for yourself. You don't have do you have a business model where you're teaching people, or?
No, I don't teach people. I just trade my own account.
Okay. You keep it simple.
Keep it simple. Okay. Yeah. I post some
stuff
on
Twitter.
This
is not an avocation. This is how you support yourself and your family.
Yeah, I make my living through trading.
All right. Okay, so there you go, guys. Everyone hears that 90% fail and lose 90% of their money in 90 days. And let me ask you this, with your handle magic, Kev, in your first year of trading, were you able to make money disappear?
Oh, yeah, very quickly.
Okay, so that was abracadabra. My account is gone. And now you've been at it 4 years and it's working for you.
Yeah, you know, it wasn't until I realized that, you know, like you were just mentioning, they say 95% of traders fail. And one day listened to an interview, and this guy said it very clearly, and he was a very successful trader, still is. And he said, listen, you know, when I heard that expression, 95% of traders fail, the only thing I thought about was, well, if I just do what the 5% do, then I'm pretty much guaranteed to be successful. So I just focused on what the 5% did. And my my mentor is extremely successful. And what did he do? He spent thousands of hours for testing his rules and learning all the nuances that made him successful. And I just did the same thing, and slowly the results started to come through.
And if my memory serves me correctly, Alfonso does not sit in front of his platform all day long. He's kind of a set and forget guy, isn't he?
No. He doesn't have to do that now because he's done the work, So he just spends half an hour to an hour in the morning setting up his trades, and then he goes off with his day.
How about you?
Me, I'm still working at it because I have a vision of where I'd like to see my trading, and it's going to require a lot more work from my end to get there, so I'm still chugging away.
Okay, Kev, any other markets you want to show us an example of your work, or is that it?
We could take a look at the euro. A lot of people have been speculating on what's going to be happening with the euro. Okay. The euro is in a monthly supply zone right now. So just like the U.S. dollar has been dropping and dropping and dropping, and we're just about to hit a monthly demand zone, the euro is actually sitting inside a monthly supply zone. But here's the key thing here. If you take a look at a 3-month chart on the euro, we just fell short of hitting a 3-month demand zone, and we are reacting to the upside. And as we reacted to the upside, if you take a look at a monthly chart, we have a really nice trend line here that's been broken by this area of demand. Right. So if price decides to break up through this area of monthly supply, which it could very easily do because this isn't the greatest area of supply, if price breaks up past this 114 spot, I can tell you one thing, is that what's going to end up happening is price is going to come down to this area of demand, and then price is going to be shooting up even higher.
Okay, so if we break through the first supply zone, you would expect institutions to take it down so they could buy it cheaper before they run it up again.
Yeah, exactly, because this area here of demand, you see the institutions or their algorithms or whatever they're doing, they're watching.
They didn't have enough time to accumulate. They didn't have enough time to accumulate at that demand.
Yeah, they didn't have enough time. And so when there's a trend line, they have to break that trend line, right? Because everybody's trading with that trend line, so everybody's shorting when price hits those trend lines, so they have to bring in enough demand into the market to not only break that trend line, but if this supply zone breaks, that means they have to bring in enough demand to break a trend line and to break a supply zone. So that's a lot of demand. And what will probably happen
is... So they've used a lot of their energy up. They're using a lot of their energy up here.
Exactly. And then it's going to exhaust. When everybody else buys and buys and buys and there's no more buyers, it's going to exhaust. It's going to head back down and they'll reaccumulate. And that's only if this area breaks. If this area doesn't break, then price is just going to fall back down and start absorbing this demand, and it can just easily break down further to the downside.
Okay. What a great interview, Kev. I'm glad I reached out to you again. I want to congratulate you on your stick-to-itiveness. That's what Jake Bernstein said is the main ingredient for someone to make it in this game. It's persistence, stick-to-itiveness, and wow, you know, the progress you've made, and what a small world. You know, your mentor is someone I interviewed a few weeks ago, and thanks for your support on Twitter, and I'm proud of you, buddy.
Oh, thanks, and I really appreciate that. Well, I appreciate you reaching out and chatting with me again. It was really nice to hear from you.
Yeah, and you know, once you really start cooking, if you ever want to adopt an uncle, I'm available. And thanks for only sharing interesting looks instead of boring looks. And you know what, my trading warrior brother, I hope pips rain down on you the rest of your trading career, and you may want to think about paying it forward. And you see some lost souls on Twitter that need a hand, help them out. And
I always do.
All right, buddy, and congratulations.
Nice meeting you, Kevin.
Yeah, nice meeting you too, guys. All the best, all right?
Yeah,
you too.
Yeah, thanks for coming in today. You made the NFP day very special. So
thanks.
Again,
I appreciate you.
I'm proud to call you my trading warrior brother, Magic Kev. You can follow Kevin on Twitter at Magic Kev, and it's Magic MAGIKEV. Everyone, thank Kev. Some interesting looks. Brilliant analysis from Arif and the algo. Everyone enjoyed you, buddy.
Thank you. Have a great weekend, guys.
Thank you
very much.
Take care.
USD yen is now toying with 110.50 that we were talking about, you know, earlier.
Yeah.
So this is.
And the S&Ps are lower. Are they lower now?
This is the do or die level.
Okay.
For USD yen, obviously a break below it should find some acceleration due to stop losses or whatever. I mean, it's bound to have stop losses there. So people should really be careful of this level. If you're long, be very careful. If you see a break below here, things are not looking good.
You have the charts, buddy.
Oh, sorry, I didn't see that.
Okay.
Also, let me remind here that NASDAQ reached our target at 5,840 to the pip. So, you know, I really think that this is a good level for another attempt. I already took, you know, a punch here, and we'll see. I mean, I took a stab here in being short, and we'll see. I'm going to keep my stop loss above the channel. Don't follow in. It's, you know, it's quite dangerous. Previous time I managed to exit with break even, but you know how it is. It's quite dangerous. But I like it. I like the structure. I like that it's very clean from a technical perspective and from an elite wave perspective. So I'm giving it a go. It's the start of the month. It's NFPs, so why not? We've had 11 days in a row that we haven't seen a drop since that Wednesday. So I like it quite a lot. We're seeing also a rebound in oil from a very important level. And actually, let me show you this. Greg, if you saw, also put this very nice chart. I'm bringing it here. Oh, sorry, wrong.
Yeah.
This is the Euro USD. He's looking at the Trump high, by the way, and there was a friend asking about it. So for whoever is asking, yes, this is a very important level to watch. And Greg, I also posted a while ago about oil, that 47 is a critical level for him, and I totally agree because it's also the 61.8. So the thesis that this move lower might be, terminal, and we might see a reversal, is based on the fact that we might hold this zone. So it's very critical to see if you see a serious rebound from here. Gregor was saying before that he thinks that this is going to lead to a leg higher. I'm deleting now this because we actually had this move to the pip. I mean, we rebounded as much as I roughly expected here, and we went back down, equally as much, but not as slowly. We had a very sudden move. So now the question is what happens from here, and what happens from here is, I see two possible scenarios. One of them is this. Okay. One of them is this. Yeah. Okay. And the other one is just straight up as Gregor thinks it's likely. I don't like to fade Gregor. I can tell you that, I believed in being short after a rebound here. We had talked about it. We were in Cyprus. I don't believe that there is a place to be short here now. But if we see a failure of a retest of the 49 zone, then that's going to tell me, because I still have no strong bias in oil. Oil has been very choppy. It has made a lot of fake moves. It has caught people off guard and caught people, getting people positioning in the opposite way than it's moving afterwards. So, I have no real medium-term bias for oil at the moment. But if I see 49 fail, I'm going to be looking for another move lower for sure. So, this is what I'm watching currently for oil. Let's see what else.
Okay, buddy.
Yeah, that's it. Euro USD still pushing the highs.
Yeah.
That's it roughly. So you want to call it a week?
Yeah, let's call it a week, and let's call it a great week.
Yes.
How about that?
It was totally.
So, I want to thank Kevin for coming in today. Impromptu, great interview. I want to remind everyone, if you're an aspiring trader, be here Monday to hear Jack Schwager, because Jack has a business called Fund Seeder, and if you have a good track record, Jack may be able to fund you. So I'm going to be talking about Jack Schwager, author of Market Wizard's new book. I have it right here. It's called A Complete Guide to the Futures Market, second edition, by Jack Schwager and Mark Etzkorn. So Jack will be here Monday. Have a great lineup next week. I want to thank all the guys and gals in the FACE community. Armand's got something. Let's see what you have, Armand. Euro USD. Okay, I want to take a look at what Armand has before we say goodbye. I respect Armand's work a lot. I want to thank the team. I mean, what a team. And how much fun it is to interact and collaborate with everyone in here. So, let's see if I could show Armand's. So, thank you, Steve.
Thank you for having us, mate.
I don't have you. You guys have me. In fact, the unemployment rate, the jobs number would have been worse if you guys hadn't have retained me a couple months ago. So, I don't know. It didn't come up, Armand. Let me try it one more time. I want to thank Blake, and I want to thank Nick and Grega and Stelios and everybody. I think we have the best team on the net. And I've been around for a while, so some people may say I'm not being objective because I'm part of it, but I'd be objective. And in fact, I challenge anyone out there to find a better group of traders in one room. Okay, so here's Armand's a very good trader. Here's his look. So he's looking for a little pullback here, a little deeper than I thought, back down towards 109 before we get a big rally. So nice look, Armand. Armand keyed me onto the pound Aussie short at the top. So don't fade Armand. This is just another example that, even though guys like Blake and Greg are master traders and Steve and Nick are great traders, and I'm an average trader. We have great traders in our community. Armand happens to be one of them. I've been watching his work for a while, so take a picture of this one. And also, that's right, remember, rubber pants, and I know why you wear those. Don't just count your pips, count your blessings. And everyone have a great weekend. We're going to have a great June. We're starting off June, our third month in phase. Thank you for supporting it. And what the heck? Sign up and take a subscription. I know the guys don't like me to be a salesman, but you know what? You don't get if you don't ask. So the squeaky wheel gets the grease. So sign up, and then you have all weekend to go over the different views going into next week, and you'll be prepared not just to squeaky door, no, squeaky wheel gets the grease. You'll be all prepared for some exciting markets next week. So with that being said, everyone have a great weekend. See you team, see you face. Adios. Thank you, Kevin, for your interview. Be ready for Jack Schwager next week, Peter Bookvar, Adam Button. Pretty good lineup. You're going to get, again, another week of great content. That I can't guarantee profits, but I can guarantee the greatest content on the net. And I do guarantee that we'll have another week of that. You're very welcome, Glenn. See you, noob. See you, Glenn.